Investments understands that our clients are the cornerstone of our business. We are committed to entrenching a customer-centric culture within the organization and everything we do. We strive to provide knowledge of the financial markets as well as offering dynamic investment products so that our clients can pursue and achieve financial freedom. Please note that we are an investment intermediary, and as such we do assist with retirement, insurance or risk, or medical health. Because we understand that your best interests as the client are intrinsic to our business, we have adopted and inculcated the following principles into everything we do. Fair treatment of our clients is central to our corporate culture. Products and services are designed to meet the needs of our clients. Our clients are given clear information and are kept appropriately informed. We provide tailor-made advice to our clients as are suitable to their individual circumstance. Our clients are provided with products that perform as product providers have led them to expect, and the associated service is performed at an acceptable standard. Our clients do not face unreasonable post-sale barriers to change product, switch providers, submit a claim, or make a complaint. My Wealth Investments believe that access to the financial markets and the ability to achieve financial freedom are available to all. We will assist you by providing the tools to achieve this. My Wealth Investments understands that our clients are the cornerstone of our business. We are committed to entrenching a customer-centric culture within the organization and everything we do. We strive to provide knowledge of the financial markets as well as offering dynamic investment products so that our clients can pursue and achieve financial freedom. Please note that we are an investment intermediary, and as such we do assist with retirement, insurance or risk, or medical health. Because we understand that your best interests as the client are intrinsic to our business, we have adopted and inculcated the following principles into everything we do. Fair treatment of our clients is central to our corporate culture. Products and services are designed to meet the needs of our clients. Our clients are given clear information and are kept appropriately informed. We provide tailor-made advice to our clients as are suitable to their individual circumstance. Our clients are provided with products that perform as product providers have led them to expect, and the associated
one is working, eh?
Cool. Testing. Yeah.
Peter, are you sure you didn't steal my water now? Oh no, you really is my apologies. No, because he's been drinking a lot of water since he walked in.
I'll start halfway through. Is it you? No.
Ja,
Van begin tot einde. Ek weet dit maak nie vir my saak nie. Ek drink my water net. Nou al die water drink.
As jy nog nodig het, sê net vir my dan kan jy nog sit.
Ek
sal my nie sit, ek's nie siek nie, as jy nog kort. Ek gaan net kort. Peter.
you can. No, don't say it. Nah, please, man. I'll just go sit like that.
Oh, you earn CPD points. You earn CPD points. We're just waiting for everyone to settle down so we can kickstart this morning. Good morning, everyone, and a warm welcome on this little bit of a cloudy, rainy day. I see a lot of people were challenged this morning with the traffic and the weather to get here, and our in-contact registrations today we're over 100, and we've seen that there's a spike on the online, thanks to the flexibility of people over the last few years learning that I don't need to make my way and trudge through traffic, but we miss you. So to everyone online, we really miss you in this room, and you're missing out an opportunity to network with some of the greatest minds here this morning that are going to share great insights on the mini budget. So I'm hoping that we're going to have you, in fact, I know we are. I'm confident that we're going to have you sitting at the edge of your seat and documenting questions that the moderator doesn't ask so that you can pick up your hands at the end and get clarity for you as well. So this morning, in partnership with Regenesis, with our subsidiary My Wealth Investments, which is a licensed financial service providers, we're excited to bring you this panel discussion. Our collaboration reflects a shared commitment to empowering South African leaders with knowledge and insights that drive economic progress. It really is a pleasure to have our esteemed panelists here. And essentially, we want to unpack 3 pillars for our nation's future. 1 is economic growth that we'd like to see you address this morning. 2 is unity. And the 3rd, the government's medium-term budget. Each of these elements that I've touched on is powerful on its own. And I doubt we could fit it into this hour, but makes for meaningful ongoing conversation with the panel that have made time for us to be with us today. But really what we want to look at is the foundation for sustainable development and shared prosperity. Today we're really honored to have some of the country's brightest minds, each bringing unique expertise to help us unpack and understand the economic roadmap that lies ahead. You know, I was chatting to David and I said to him, what happens when they ask you a question that you don't know the answer for? And he says, then I learn with them. And I loved that. And that's what we're here today for. We don't have to know all the answers to navigate forward, but we need to have an inquiring, inquisitive mind to be able to ask the questions, to equip ourselves, and some of those learnings happen together, not because it's happened before. So we're looking forward to the wealth of knowledge and insight on how to foster growth that benefits everyone, while strengthening that unity that binds us together as a South African nation. Through their expertise, we will gain a clearer understanding of the budget's role in supporting our aspirations and addressing challenges, from reducing inequality and enhancing opportunities for all of us. The medium-term budget is more than just numbers on a page. It's more than just a delivery from government. It's a vision for our country's growth, resilience, and prosperity. With challenges like the global market volatility, geopolitics, and deglobalization with the re-election of President Trump, fiscal pressures, and the urgent need for inclusive growth, the budget is pivotal in shaping the future we envision. Thank you all once again for joining us, and we look forward to a thought-provoking discussion that will inspire us. Allow me to introduce you to the panel, and then I'll hand over to our moderator, Shepo, I want to say your name right, Mongwai. Shepo Mongwai. He needs no introduction. He's hiding behind me. I'm going to move off stage so you can have a good glimpse of Shepo, but you all know him when you switch on the business news on SABC. So experienced news reporter with almost 2 decades of expertise in covering South Africa's macroeconomy, focusing on fiscal and monetary policies. He's currently serving as the economics reporter for SABC across both radio and television. So we're really thrilled to have you in our auditorium today. Shepo, I'm going to ask you to stand because I hate blocking you. Please give Shepo a round of applause, everyone. Annabelle, welcome back to Regenesis. We're always thrilled to have you, Chief Economist at Investec. Thanks, Shepo. You can have a seat. And then as soon as I move, you can take it. Annabelle joined Investec in 2001 and is currently their chief economist. She has worked in both the macroeconomic, econometric risk, financial markets, political risk, public finance, and regulatory, among many other fields that I'm not going to list here. She's also the holder of the Saki Beeld Economist of the Year Award in 2010 and has won numerous monthly categories and various focus economics and forecasting and world-leading economics. Welcome back and thank you so much, Annabelle. Let's give Annabelle a round of applause. From Investec, we move across to ABSA. Tell us your story. Mialani Maluleka is a senior economist and head of South African macroeconomics research at ABSA Corporate and Investment Banking, where he leads macroeconomic research and analysis. With a career spanning over a decade, Mialani previously served as vice president of fixed income, currencies, commodities research at ABSA and as senior economist at South Africa's National Treasury as well. Thank you so much for joining us. Analysis. With a career spanning over a decade, Mialani previously served as vice president Aniki van Rooyen, currencies, commodities research at ABSA and as senior economist at South Africa's National Treasury as well. Thank you so much for joining us. Director at Standard Equities. Aniki van Rooyen, our very own MyWealth subsidiary at Regenesis. Aniki has more than 20 years of experience as well, and previously a director at Standard Equities and head of dealing at BOE Stockbrokers. She's also managed the BOE Alpha Fund, long short equity fund, and was nominated in 2007 in the category of top new funds. Aniki is currently the CEO of MyWealth Investments at Regenesis. Thank you, Aniki, for organizing this event. Aniki herself is both on radio and TV, commentating on the markets very often, and has been able to pull her comrades together and colleagues to afford us this opportunity. David Shapiro needs absolutely no introduction. I'm not going to go into the decades, right? They're going to work this out too quick. But David is well known, has had an established relationship interrogating our chairperson somewhere in the 90s, I believe, and has had a long relationship with Regenesis as well. He's the chief global equity strategist at Sasfin Securities. Good on them for being able to secure you, David. He's managed private client portfolios, served on the Sasol Pension Fund investments, and it goes on and on and on. He was honored by the South African Society of Chartered Accountants for his contributions in this industry, and a lifelong Arsenal supporter. You have to put that in there, David. David enjoys running, collecting. Before that, like I had you on this pedestal, 10 stories higher, right? Collecting art and drawing as well. So the right brain stuff really, really is out there. So thank you so much, David, for being with us. It's an honor to have you with us. I want to hear the roof falling for David, really. Peter Major, Director of Mining at Modern Corporate Solutions, with 4 decades of experience in mining and investment sectors. Born in New Westminster, British Columbia, and raised in the mining hub of Kellogg, Idaho, Peter's career began after graduating from the Montana School of Mines in 1981 and working for Harmony Gold Mines in South Africa. He holds a South African Mine Manager Certificate and MBA from the University of Cape Town, and he's transitioned into investment as a gold mine analyst with Alan Gray and later became a top-ranked fund manager at Netcore Investment Bank. That's quite a shift in career. Peter, thank you so much, and we look forward to both sides of that coin as you contribute this morning. Koki Koiman, Director and Portfolio. Let's give. Yeah. Thank you for holding me accountable. I love you already. I love you. Koki Koiman, Director and Portfolio Manager at Denka, is the Director and Portfolio Manager where he oversees the award-winning Denka Global Financial Fund and its Rand-denominated feeder fund. Okay, Koki, you'll explain what that means to us. With over 3 decades of experience in investment management, Koki began his career at Old Mutual. Nishen, you have a friend and colleague there, where he spent a decade in various roles, ultimately leading the financial services sector. He then managed local and global financial funds at Coronation Fund Managers before establishing Sim Global in 2004, which later merged to form Denka Capital in 2015. Koki has received, again, multiple accolades. There's a whole list, including the prestigious UK-based Investment Week's Fund Manager of the Year award 4 times, as well as Morningstar and Raging Bull awards for his outstanding fund management. Welcome, and thank you so much for joining us as well. So a round of applause for Koki. I'm not going to take away Shepo's thunder this morning. I'm going to hand over to our very experienced moderator, and we're going to take this to TV and radio heights this morning as we interrogate and inquire where to from here for not just our colleagues online, not just for our staff and our attendees, but really to internalize what this means for the vision of our country and collective consciousness, as well as unity and growth for South Africa. Over to you, Shepo.
I think I have a mic here.
Yeah.
Can I use this one? All right, I think we're ready to go. Apologies for the slight delay. Yeah, it's going to be exciting. I think we're going to learn a lot. As they introduced me, my name is Tepo Mungwai. I'm a journalist, but please feel free. David, I'm not going to quote you today, so you are free. So I'm with the SABC business unit. The backdrop of course, our discussion is the medium-term budget policy statement that was presented by the finance minister about 2 weeks ago. There's been a lot of mixed reaction. We have about, I think, 6 trillion budget that we was presented. Our debt burden is around 5 trillion rand total. We pay over 380 billion rand a month. So a day, apparently, 380 billion rand a year. Yeah, a day is about 1 billion rand. In fact, somebody was saying that if we have to divide the country's debt burden by the population, including children, each and every person will owe about 89,000 rand. So it's quite interesting. But the brains here will definitely help us to navigate that uncertainty and fear that we have, especially when we look at the country's fiscal framework. Ladies and gentlemen, the budget has been delivered. And I'm sure it has triggered a lot of comments from you. But I think going forward is the main budget. Because of time, I'm going to ask you to be very brief. I think that's very, very important that we try to cover as much ground so that everyone here is able to benefit from this interaction. At least maybe keep it within 2 minutes for now. going forward into the main budget, what would you say were some of the highlights that actually you would need a little bit more certainties, or were some of the main issues that perhaps looking forward to the main budget would be of main concern, would be those issues that you'd like them to get a little bit more meat from them? I'm going to start with Annabelle.
Hi, thanks. Look, I think, we characterize the mini budget we just had, the update, the MTBPS, as seeing significant fiscal slippage when the expectation in the markets was for the opposite, for some strengthening in government finances. So first off, we'd look for February's budget next year to see if we are going to be on a path of fiscal consolidation. Have they managed to pull something back? Of course, the mini budget is not a time for tax changes, whereas February's budget is. So there are anticipation there, and of course our Finance Minister, Ina Godongwana, has mentioned many different areas they're looking at for tax, but one of them obviously, of course, is wealth taxes. So I think that's going to be on high net worth individuals. They actually are very high net worth individuals, but nevertheless there could be some small tax changes. We don't anticipate anything very large. There's been an indication potentially of a higher corporate tax rate as well. This is more an international alignment arrangement, but also what we've heard in the mini budget, interestingly, is a change potentially coming down the line at some point in the inflation target. Now, the National Treasury sets the inflation target, whereas the Reserve Bank has to achieve it with its interest rate changes. So quite a few things already stacking up for next year, but for us, you're saying the main thing we'd really be looking at, more detail on investment. This medium-term budget policy statement was peppered with references to fixed investment, infrastructure investment, public-private participation, many plans going forwards on how that's going to be. And of course, we're going to look for more detail in that area. Is government going to be able to make it attractive enough to draw in the private sector into those PPPs? And of course, that is obviously key for South Africa, a strong domestic investment base to drive economic growth, but also to support the economy as well.
Yeah, good morning. Thank you very much for having me. I don't want to repeat the stuff that Annabelle has already spoken about, but I think I do share her comment that, of course, the fiscal slippage that we had was a little bit disappointing. But I think it's also important to look at South Africa's fiscal story through sort of a longer lens here, right? We've had a very long period of debt accumulation, running wide budget deficits, but we're actually now in a space where for the first time in 2023-2024, National Treasury achieved the primary budget surplus. Yes, there's fiscal slippage, but this looks like another year where they're going to achieve another primary surplus, right? And they're still talking about that debt to GDP ratio, that debt that you're talking about, peaking next year. So I think that part of that story is exciting, it's positive. But I think more to your question, what are some of the things that we're still concerned about? We just think that medium to longer term, the risks on the spending side still seem to be on the upside for us. We know that going into next year, the government does not have a wage deal in place. The discussions taking place with the labor unions right now. I think the initial salvo from the unions was for 12%. National Treasury has not penciled anything much more than, I think, about 4.7, 4.9%. So it's going to be quite critical, I think, to hold the line on that. And then, of course, you've got state-owned companies. I think the one that's been in the headlines a lot has been Transnet. It's been clear that they need support, I think, to drive their recovery plan. We don't know if they're going to get that support. We need some clarity on that. And then, of course, you've got something that I think has become top of mind for many South Africans lately, which is the dysfunction that you have at municipal level. What can Treasury do there, right, to intervene? I think we don't have a lot of clarity, and I think it's one of the things that I think going into the budget next year, we'll be looking to get a better sense of, because that becomes really critical for whether Treasury is able to then get this debt to peak where they want it to peak next year and actually get that debt to plateau going forward.
Well, if this was an exam question, I would have plugged. So I'm going to, because I'm much more pragmatic, and in a sense of how I approach market, how I approach these issues. And I look at it from an accounting point of view, because that's all I know: debit and credits, cash book. I'm not an economist. I'm not a monetary economist. But I find that I found our state of finances really particularly worrying. I'm deeply concerned because if you look at the growth rates, which really come from the amount of money that we receive in taxes and the amount of money that we spend on investment, and we're far away from providing the foundation for any real growth to come. There are too many other issues there. There are too many. I mean, if you take our unemployment, if you meet 10 people in the road, only 6 of them are employed. 4 of them are unemployed. So who's going to look after the unemployed 4? The 6 that are employed. So when you take that forward, you can understand why growth is going to continue to remain where it is. And unless we turn it around, we're going to continually fall behind the rest of the world without growth. The amount of money that we're putting into fixed investment is not sufficient to really give the platform for any growth. So I look at it from that point of view. What did we collect? In other words, what did we collect? What are we spending? What's really left in the kitty to actually enhance our growth? So I'm deeply disturbed by what I see, and I'm looking at it from a risk management point of view. I look after people's money, and I have to decide where in the world do I invest. Is this a place, and I'm agnostic from that point of view. I'm not swayed by emotion. I'm not swayed by, say I have to invest in South Africa because I get Voyager points. No, I don't. I've got to say, where am I going to make money for my clients? So I think we've got to look at it really pragmatically and say, hold on a sec, there's a lot of work that we have to do here. And I think a lot of that comes around the people who are running the company. With that, I'll be quiet for the rest of the week.
A bit worrying. Aniki?
Right, so David and I look at the budget differently, as he has mentioned, because we are directly involved with the markets. When I first listened to the minister, I was disappointed, mainly because the debt to GDP ratio was worse than what was predicted, plus he revised the economic growth figures downwards, the GDP numbers. But now that I've had time to process everything that he has said, I'm not as negative as David. Maybe I'm the eternal optimist, but I do feel that they have made very good progress. South African market is only 3% of the world, the global emerging market index, the MSCI index. We've outperformed that index by 13% this year. Our market has discounted basically good news of before the GNU came in and afterwards. It has discounted a lot of good news. We've seen the retail sector, the property sector, the banking sector outperforming. Even with those shares at elevated levels, they still offer good value. So same as David, I don't get emotional, but I do look at valuations and compared to its international peers, I do think that the South African market still offers value. I do feel that a large portion of your portfolio should be invested offshore for diversification purposes, to mitigate risk and to enhance your growth prospects. But I do feel that there are pockets of value in the South African market. If I take examples, Transnet has not deteriorated. They're aiming to rail 190 million tons at the end of this year, up from 146 million tons. Right, it's come down from 220 million tons, but at least they're stabilizing, they're not deteriorating. Also, I can see that this new government is committed to economic stability. And it does seem like the debt to GDP ratio will stabilize at this 75.5 level. Maybe they surprise us and even come out with better numbers in the February budget, you never know. What my concern is the interest rate cycle, because things in America has changed and South Africa is highly dependent on what happens in the rest of the world. So if Donald Trump goes ahead with less stringent fiscal policies and inflation does increase, it might affect the interest rate cycles, it will affect our ability to pay our debt. Our daily 89,000 can very well increase to 100,000, or it might come down. It all depends on what's going to happen in America, what's going to happen between America and China. China is an important trading partner of ours. Will Trump force their hand to introduce more aggressive stimulus packages? We will benefit from that. So I personally feel that he was under-promising to over-deliver in February. I might be wrong, but if I read the international analysts' comments, they're expecting growth coming in at 2%, higher than what the minister was predicting. Plus, at least we're not going to get downgraded further. So those debt ratings will also improve from here. So in a nutshell, I was disappointed, but I think I look forward to the February budget.
Absolutely.
Thank you.
Koki?
I'd partly go along with you. It's a small step in the right direction, but just not enough. And I think what really worries me is the ideological thinking still in terms of increasing wealth taxes or thinking about it. We live in a global village, and capital can go wherever it wants to. And other countries that have done a similar thing have seen that the wealthy just emigrate. You can go to Hungary, you can go to Portugal, you can get for whatever, you can get a citizenship there. And it's underlying, and I'm sure we're going to discuss this a lot, the message is not we must attract capital. And if we attract capital, then you can do a lot of things, and your interest rates start coming down, and that frees up a lot of space in your budget. If you just think of what Donald Trump, why did he win the election? He promised three things. Whether he'll deliver is another thing. He's a politician, but okay. But people voted for basically three things. Tariffs, which means he says, I'll create jobs. And then he said basically, that he's going to deregulate. For every new piece of regulation or rule, he'll scrap 10. So it's and he's going to reduce tax rates. He wants to reduce tax rates from 21 to 15. So, and what does the market do? Bank shares went up 10% on the day. And so, if you really want to grow, you've got to create jobs. You've got to, doing that, attract capital, reduce tax rates, and you've got to deregulate. And I think that wasn't there in the budget for me.
Peter?
I didn't watch the speech, and I didn't think I was going to miss anything. And then when I read the speech, I knew I didn't miss anything. I found it terribly dull, boring, monotonous, just like all the previous ones, including the full-time budget. But I thought, for a short-term medium budget, do you have to have the layer and layer, page and page of all these platitudes and thinking? Just let's get into some numbers. So I had to read it 3 times to try and find out, are there any gems in there, or are there any landmines in there? Because it's just so repetitive. I'd love to know who wrote the budget, because the guy who gave it, I don't believe wrote it. There's definitely a team, a whole bunch of people wrote that budget, I'm sure. And the majority look like Marxists, Leninists, bureaucrats that just want to continue as we've continued for 30 years. There's nothing in the budget that says we want to do something different. We want to be something different. One of the positives I found, though, very low expectations, as we've already heard. Usually we hear these goofy expectations. We're going to grow at 2.5 and maybe 2.75, and that's a joke. Our minister put in 1.1, 1.9. I think we will grow that, not because of the budget, despite it. There's nothing in the budget about mining, and okay, I'm biased, I'm a miner, but this budget was great in 204, 205, 206, 207. It wasn't great because of the people that put it together. It was great because of mining. We were at the start of a super cycle after 20 years of a bear market, and there was so much money coming in from mining that it made Trevor Manuel look good. It made the country look good. It made everybody look good, and they were all claiming credit. It was mining. But they've milked that goose. They've stabbed it, cut it up. That goose can't help us. We're in the highest commodity prices. Look at the gold price. Never been this high. It's barely helping us. And there's never anything in the budget to help mining. They always overestimated mining. They're talking about wealth taxes and crazy things. Yeah, I don't see anything good in the budget other than our debt is not over 80% to GDP. It's a miracle it's not over. So somebody should get credit for that, and probably Enoch deserves some credit for that. But yeah, 385 billion debt, 6 trillion debt, and we had this thing so cleaned up because of mining, 204, 205, 206. We cleaned it up, and look what they've done with it.
Right, thanks, Peter. We often say with the local government that they pass an unfunded budget, but it looks like even with our fiscal framework, there's a lot of needs. We've got the NHI, and there's no clarity in terms of where the money is going to come from. Maybe staying with Aniki and Koki, we're hearing that government now wants to tap into the PIC to help fund the NHI. We've got a social welfare, massive, basic income grant. There's no clarity there, but we know we need a lot of money in order to make sure that those people who cannot find job are taken care of. Of course, we need to grow the economy in order to accommodate all that. The wealth tax, Annabelle mentioned it. So from your side, what would it do in terms of the financial markets if we need money, and we need money as of now? What kind of impact would that have, the introduction of the likes of the wealth tax, when you speak to your clients, who many of them are wealthy?
Well, it will certainly put investors off, and we need investment in this country. We don't want hot money. We don't want money to come in quickly and leave the country quickly. We want money to come in and stay here. So on the one hand, you have to say that they have to be careful not to scare investors off. But if they go about it in the right way and find some sort of solution that private sector is also satisfied with, maybe they can come up with some sort of a solution. How they're going to fund it, I don't know. Plus the Pension Fund Act would have to be amended. So it will be a lengthy process. And you have to ask yourself the question, if you look at the state of the current health sector in this country, it's not looking great. So I don't know, maybe the collaboration with private sector will be able to get something like that off the ground. But I don't want to be too critical. And if you ask me how will they fund it, right now, SARS can probably go after all the crypto profits and tax it, and they would just be able to fund it. Thank you.
Koki, what will the wealthy be able to give us money tomorrow?
No, as I said, they'll flee. I mean, they can. And, but I think the main problem in South Africa in terms of government is an ideological one. So it is believing in state-led initiatives or enterprises rather than using the private sector. And maybe for the students here, do a thesis on Greece, and maybe Argentina just started developing, but do one on Argentina. I mean, the new government in Greece took over when the debt ratio was, I think, 2.5 times what ours is at the moment. And the new Prime Minister came in and said, we want to reduce the debt levels, we want to grow the economy. And actually, since that time, the market is up, the bank specifically, 600%. Go and look at what's happened to Greece and what it's happened to its economy in terms of job opportunities. Same with Argentina. The new Prime Minister came in quite controversially. He was actually elected unexpectedly, and has set in motion a private sector-led reform. So in that regard, if you want to use the PIC to fund the NHI, and whenever you're actually using captive money to fund something that then is not responsible. So if there's one thing I think we do need to get back, and when you ask me later, what are the 3 things we should do? The one is to bring back accountability. And you want, where money is spent on, that money must be accounted for and how and why it's spent. So at the moment, if you simply increase wealth taxes without the wealthy seeing where it's going and that's going to get a good return, but it's simply continuing going down the same drain, it's going to flee.
Yeah, last one on the taxing the rich, David. We desperately need the money.
Yeah, I want to dispel 2 myths. Okay. And it's very important. if we look at the JSE, you know, there's always this view that there's this incredible wealth out there that we can just tap into. I do admittedly a back of the matchbox calculation, but it's pretty close. If you take the JSE, 70% of the market cap of the JSE are foreign companies, or companies that earn no money or less than 25%. That's generous. I think it's closer to 15% in South Africa. So that's 70% of the JSE. If we look at some of the mining companies, you know, I exclude Glencore, I exclude Billiton, I exclude to an extent who else is there, you know, who don't earn in South Africa. But yeah, you've got probably another couple of miners there that make up 10% of the market. And then JSE Inc. is only 20% of the JSE. That's all. And those are normally either the banks, but a lot of the banks already earning money outside. So I think we've got this almost myth of what we can tap into the so-called private sector, you know, and that's why people are looking at the PRC, which is pension funds money. Never. That's like stealing your children's piggy bank. You know what I mean? When they're not looking, you've got a little piggy bank there and you need money for bread or something, you go break it open. That's what it is. You never tamper with other people's pension. So that's a no-no. And I think there'll be a huge negative reaction. The other thing as well, you've got to attract people into this country. You want to attract foreign. If you were to put, again, if you go back 10 years and you put $100 or $1,000 into the S&P, that $1,000 today is worth probably $2,500. If you were to put $1,000 into the JSE, I'm talking dollars, it's still worth $1,000. Maybe give or take. Yeah. Just so you're not discomforted, if you were to put it in the UK market, it'd still be $1,000 as well. If you were to put it into Europe, it would be probably 1,250, slightly higher, because they had some luxury goods. But the difference is because of technology and what technology did to the US markets. So I think people coming into South Africa, you want to attract money, there's got to be growth. There's got to be the promise of growth. And when we were discussing the budget, the rand, in fact, is closer to 18 again because of the dollar strength. If you go back to where we were 10 years ago, the rand is depreciated at a level of maybe 5-6% per annum regularly. It's not symmetrical, it's asymmetrical, but that's what it comes down to. So when you want to attract foreigners, you've got to compensate for that. You've got to give them, I think what Koki and what Peter have said, something that they can grip onto that's going to give them the ability to earn more than they could earn in other markets. So you've got to start with that. So you want to do NHI, you want to do all of these, you better change ideologically, you better change a lot of things here that will allow them to come in.
Right, yeah, quite interesting. I don't know if there's anyone else want to... Okay,
Who needs the money you're talking about?
well, we have the JSE. I mean, there's massive trade on the JSE.
ANC needs the money, because the government doesn't need the money. The government's got too much money. And the average guy in the street, he doesn't need money, he just needs a job.
Well, I'm going to bring in Mielani, but we know, I want to bring in the issue of the market rates that are coming down, but just at your point, we've seen interest rates coming down, we expect them to come down, so perhaps that will drive capital investment. Mielani?
I want to make a quick point about wealth taxes. I think often there is this notion that the only way to get more money is to raise taxes, right? Whatever they are. And I was surprised to hear the National Treasury officials make this case in Parliament that they are looking at wealth taxes. Well, I think right now, and in fact the National Treasury officials themselves would have told you a couple of years ago that you're probably taxing the private sector as much as you can right now. That you're probably not far from the so-called Laffer curve. I'm not just talking to you here, Annabelle, where taxing people more is actually going to generate less revenue, right? I think they've made that admission before. So I think we're at a point where we need to make the recognition that the best way to grow the tax revenue at this point is to grow the pie. Get the economy to grow faster. You need economic growth. That way you can generate more tax revenue rather than continuing to tax people or the private sector that's already overtaxed, right?
Well, we have structural reform in place. Hopefully that will help. Annabelle?
Yes, hi. Look, I think the point is correct, and obviously we look at tax buoyancy ratios as well, maybe an easy way to understand it. At some point, you start to get less money coming into your government coffers when you increase tax rates, and that's something that happens all over the world. So, perhaps simplistically, someone might think the higher percentage of someone's income that you tax them on, the more money you'll get. But actually, it gets to a point where economic growth collapses so much, you actually end up with less money in the tax coffers. So I think that's an important point. But you wanted to talk on interest rates as well.
Yes, interest rates are coming down. For a long time, some of the projects were not being able to carry it out because interest rates were just not favorable for some of these projects. I want to get a sense of, are we likely to see, we used to talk about investment strike, but strange enough, even government is on an investment strike because many of their projects are not coming through. Are we likely to see a change of mind, particularly with the structural reform, where we are seeing the call for this closer collaboration with government, or there's just many other concerns that could actually take us back?
Well, something quite interesting that's happened in South Africa over the past decade and almost a half now, given that we go into 2025 next year, is that we really found ourselves in a situation where the private sector investment is being crowded out of the economy. And if we look at where we were in the 2000s, when we had our yield on our benchmark 10-year government bond at about 6%, and that's then risen towards 10%, and even in 2020 and again this year above 12%. That's actually offering a better return, often, than many investments with very little risk and obviously a substantial return. So that's what government means when they talk about crowding out investment. The more that the state borrows, the more money that it needs to fund its massive gross debt as a percentage of GDP, its ratio at 75% and hopefully peaking there, the less, obviously, that there is to go around for other areas, because you're borrowing that money either from foreigners or you're borrowing it from the private sector in South Africa. And our banking sector is the huge lender towards government in terms of its debt. So that really gives you some risks as well, but really looking back at the savings in South Africa, households really are quite flat. Government's a massive dissaver, it borrows, it doesn't save, and at 75% of GDP it's got a huge borrowing requirement, and of course very high borrowing costs. And your corporate sector does save, but people often think, oh dear, the corporate sector saving is not investing. They forget that a lot of the savings actually are there to replace deteriorated, depreciated infrastructure, and that's obviously where Eskom went wrong. Eskom didn't build up savings, so it couldn't replace its depreciated and deteriorated infrastructure, its power stations which are aging and collapsing, its transmission lines. We know transformers blowing up in suburbs and we don't have electricity for a couple of days. All of those factors really talk to bad fiscal management. Instead, Eskom borrowed and borrowed and borrowed. Now, if you'd like your corporate sector to do the same and not save either, and not have any money in the kitty, how are you going to replace your depreciated machinery? How are you going to replace factory equipment, replace factory itself? The private sector can't go to government and say, oh, sorry, we need more money from government finances. We need you to bail us out because we spent everything we borrowed like mad and we've got nothing left to run our businesses. You'll just collapse. So, that's been a big problem in South Africa. Turning it around, well, obviously we need to make South Africa attractive not just to foreign direct investment, to the private sector as well. A case in point, if you look at the Department of Mining and Mineral Resources, and of course energy as well, we have these huge gas reserves and coal reserves purportedly off the west coast in South Africa towards Namibia. Namibia is benefiting enormously from extracting, and we're not, because we can't actually get our regulatory situation right to be attractive enough for foreign investment. So I would say to you, in summary, we need to have a better, more attractive regulatory environment to pull people in. But that's what government has proposed in the medium-term budget policy statement. They've talked about many different mechanisms, options, and vehicles they're looking to bring in. So again, we'll wait and see as they start to unpack
All right.
that.
Thanks, Annabelle. Peter, just bring in Peter right there at the corner. What's happening in the mining sector? We haven't seen new mines. We were told that capital is too expensive. And we need that investment because it has a whole lot of ripple effects. If there are new mines coming up, will the new interest rates, low interest rates help to get some of the prospecting rights and new mines come on?
We haven't seen new mines in 20 years. Since the geniuses decided to go back on their word and nationalize the mines in 2004. They did a direct double cross. Mandela got up, gave a speech in 1994 saying we will not nationalize the mines like all the countries north of us because it leads to disaster, hardship, impoverishment. Yet 10 years later, the geniuses that were running the country decided Mandela was too old to know what he was talking about. We're going to nationalize the mines. We're going to do it different. So yes, we've had no investment in mining to speak of. And it's foreigners that built our mines, not locals, foreigners. It was foreign money, starting with Rhodes and his banker. Cookie and I were talking about all the bankers that funded all the miners. It's foreign money. And as long as you played by the rules and honored your commitments, they were happy to give you money. So in 2004, we were coming out of a horrible 20-year bear market. And the miners had worked hard. They'd taken wage cuts. They'd sacrificed. Everybody did their bit to keep the mines alive. It should have been nirvana, 204, 205. And we dropped this atom bomb and say, guys, we've just changed the whole regime. You're going to pay taxes and royalties whether you make money or not. You're going to give 30% of your mines to somebody you don't know. And it doesn't matter because you're not going to see him much anyways. He's not contributing. You're going to spend 70% of your money on people we tell you to. So we erected huge barriers in 2004 that have withstood huge raging bull markets overseas, that have withstood 0% interest rates for a decade and a half, that's withstood trillions of dollars looking for homes. And a lot of those trillions of dollars, not trillions, but tens of billions of the dollars that was going to come here went to the DRC and Zambia. So you go up there, those countries are still in horrible shape. Infrastructure stinks. Ours is even better. And yet they still got tens of billions because policy is correct. All we got to do is change policy here. Mining can take off tomorrow, but the powers that be are adamant. You can tinker with anything in this country, but you do not touch our mining legislation. We're going to keep that permanent barrier there. We don't want any foreign investment in mining.
All right, Koki and Aniki. The issue of investment. I mean, if you look at the recent results from some of the top 40 companies, you can see they're doing very well. Dividends, I mean, yesterday we had Vodacom. Of course, they reduced their dividend. But you look at the fundamentals, they're performing very well. There are a lot of expansion plans. I was reading that there are going to be about 100 malls that are going to be built in 2024. I don't know how many of them have actually come to fruition. But you do see plans in place among some of the big stocks in the company in terms of their expansion. Woolies wants to increase the size of their stores and sell more alcohol. So,
I haven't got much to add there, but as David says, just to explode a myth, remember when companies pay good dividends, it's not a good thing. It's a sign that they are not finding avenues to invest the capital in. So you give it back to shareholders. So an increasing dividend, especially if it's a high dividend, is not a good thing. In terms of growth, the sectors you mentioned are all very much in the consumer space. We've got a growing population, and the government does create income even via grants for those people. So I'm not sure if we're seeing the growth that we need in terms of infrastructure development, in terms of mining, in terms of, so in that regard, if you also look at where the banks are going, they all want to grow offshore. Standard Bank is doing all its work in Africa. First Rand has just announced another payment system in Africa. Yeah, so I think the growth plans that you are seeing are based on the hope that the GNU will get it right. And so a lot of that is obviously saying, okay, this is a turn, it is a significant turn. Even inside government, you can already see the changes. So the hope that this will continue.
Well, just to add to what David and Koki have said, we We're currently looking at the interest rate cycle globally that is turning down, and traditionally that is very positive for equity markets. So I do think that there is a lot of hope that GNU will get a lot of things right in this country. I do believe that they're already making a big difference. The other thing that is positive is the fact that inflation is moderating worldwide. If America doesn't disrupt the cycle with the new president, then there's no reason why we don't see another 100 basis points at least over the next year. And that is positive for companies and the retailers. Plus, don't forget, the government did create stimulus by way of the two-pot retirement system. So people can now withdraw from that savings pot. And I think they're anticipating about 40 billion in withdrawals this year. So that will fuel consumer discretionary spending, definitely give this economy a boost. And I do think that there's more positives going for us if things don't change drastically in America.
Absolutely. David, you want to say something?
I think, and I speak to everybody here and online, if you want to learn about a country, and great respect to the economists, I'm not taking anything away from them because very clever and it's something that I've never got my head around. But do yourself the favor, do the easy thing. If you don't understand Lesecha or you don't understand the budget, just read the company results that come out. And you don't even have to look at the thousands of numbers that they publish. Just read the commentary, the headlines. And you get a very good feel for what's happening here because they're honest. And if you break down the results that we get, they begin to highlight the problems that they're having. They'll tell you about Transnet. They'll tell you about Eskom. They'll tell you about the additional costs of power. They'll tell you about the inefficiencies in the system, the frustrations that they have. And if you want to take one segment, have a look at our construction sector. It's decimated. You can buy Murray and Roberts, and there are a couple of old timers here. I think even though Annabelle's a youngster in relative to Peter and myself and that, have a look at Murray and Roberts, which at one stage was the most powerful business around, a construction company. You can buy it for less than 600 million rand today. I think the tires on their trucks are worth more than that. But it gives you an idea of the collapse of those companies. Avenge. A lot of them have gone. A lot of other things have gone. Wilson Bailey are making their money. They publish their accounts now in Australian dollars, or Avenge does. But most of them are looking elsewhere. So it gives you an idea of how things have deteriorated at that ground level in terms of construction. PPC, go look and see how many bags of cement they're selling. You can go to Cashbuild and look at those kind of accounts. So you get a feel for what's happening. Even Truist, when they came out with their results on Fashini, there was no growth. A lot of the growth came from their offshore investments, office, and so on. So I think you get a feel for what's happening here. And I'm just going back to what Peter and I think we've all said, Annabelle, in all different ways, is things have to change. You've got to change policy to attract investment. And what happens, and going back to what Peter said in 2004, when people come here and want to invest, we don't put out a red carpet for them. We don't. We give them a list of demands. This is it. This is who's going to be your partner. This is where you're going to buy things from, etc. And that turns people away. So there's a massive change in attitude that has to be done. I'll say something positive later.
But there also, David, there are also challenges overseas. I mean, you look at the devaluation of the currency. I mean, Vodacom yesterday.
Yeah. Yeah. Well, Vodacom is it's ex-growth. I mean, I always jokingly say, and I'm not far from the truth, Vodacom has to spend billions in laying out its infrastructure. But everybody here, especially those who are students, they don't want to pay for data. They want it free. They complain. They go to Starbucks and they get free data and so on. So no one wants to pay up. Yes, yeah. You see. So that's Vodacom's problem, and it's not unique to Vodacom. It's a global issue. But that was a very poor result and highlights exactly the kind of problems that they're having, especially a lot has to do with Africa as well and the depreciation of those currencies and that. But look at the results, read them. You don't have, takes me only 5 minutes because that's a full capacity of my understanding. But
Absolutely. I think, we're drawing to a close. I just want to look at the Operation Operation Vulindlela. The structural reform. There's admission that we need to deal with those bottlenecks in terms of infrastructure, ports, ESCOM, and so forth. Competition, we see our competition, it's concentrated. Your view on the work, I'll start with Annabelle. Are we on the right direction? We're told that in terms of power, we've really made some progress.
So I think there's a number of factors that have gone into it. If we look at power, and thanks for bringing that up first, because that's what I was going to talk about. The government's communication has been that we've seen a halt to load shedding, not necessarily the end of load shedding, but of course we all hope we've seen the end of it. And there's been three factors there really. One of which we mustn't forget is National Treasury. National Treasury has actually said to ESCOM, a couple of years ago, if you want to continue to borrow, if you want us to service your debt and pay off your debt and sort out the huge financial mess, which is basically making them inoperable, then obviously you need to agree to our requirements that we obviously will not allow you to take on more debt, that we're obviously going to bail you out, but of course we're going to allow the original manufacturers of the equipment to come in to work on the power stations, to get them up to speed, to run them, which is obviously what's caused the lack of load shedding. But let's not forget the huge infrastructure build as well on the rooftop solar that we have in private homes, and obviously businesses around the country as well, which has massively reduced demand. And ESCOM, of course, does talk about that big drop in demand, obviously very key. So the repair of and refit of the power stations, but then also, of course, as well, freeing up money to obviously service the power stations themselves. That was another constraint with ESCOM actually having spent a huge amount of money, interestingly, on salaries and wages, but not on keeping these power stations running. So you can see that while it was an aim of Operation Vulindlela, and obviously, a core requirement, has actually been sorted out through many different facets, not just obviously one arm, if you will. And of course, if we look at the problems we have in Operation Vulindlela, including water, the water crisis, the freight crisis as well, the freight crisis is being turned around. I saw an interesting statistic a while ago from Stats SA showing that we are now seeing a lot more happening in terms of rail transport for goods. And of course, if you drive around the country, you can see the rail system starting to get up and running again. So you can see there's been positive developments there as well. But again, it's required a multi-pronged approach. And I think, that's really my answer to you from Operation Vulindlela. It's important to state the objectives, the plans, and what we need to fix. And of course, the water crisis coming in next, and, extremely important. But nevertheless, we also, of course, as well, have made huge progress in terms of fighting crime and corruption. And, if we look at FATF's examination of where South Africa was and the number of deficiencies, we've worked those down very substantially as well. It doesn't mean we're going to get off the grey list very quickly. We'll probably get off it around the similar average of about 3 years it takes other countries. But again, it's required a concerted approach right across the board, whether it's, National Treasury, Reserve Bank, state agents, at the moment seeing as one of the problematic areas for compliance, obviously terrorist financing. So really looking at the impair, looking right across the board. And that's really what I'd say to you for Operation Vulindlela. There's been progress, but it's been due to many role players.
All right. Mielana, how soon can we really start turning the corner in terms of this Operation Vulindlela? How soon? Will it be in the current medium-term expenditure framework, or it's going to take us a while?
Look, we hope so, right? And I think one of the things that a lot of people tend to ask us about in the context of this new administration is that, what does this mean for reform? And I think one of the things that we've been trying to highlight is that I think the good thing for this new administration is that it's coming against an environment in which President Ramaphosa had actually already carved out a little bit of space, I think, to be able to do some reform. And I think some of these initiatives that Annabelle is talking about here were actually done even before the formation of this GNU. So our hope is that this new administration, I think, uses the sort of capital that it enjoys. I think uses the support that it enjoys to do more, I think, as far as this structural reform is concerned. I mean, you were asking about interest rates earlier, and I'm thinking to myself, if you're an average South African, you saw your interest rates go up 475 basis points, and the discussion that we're talking about here is not interest rates going down even 200 basis points. It's 100 basis points. It makes a difference at the margin, right? And ultimately, what you really need is what I think everyone in the panel has been talking about, is how you get investment going. And I think using these structural reforms to make the business environment better, to make it easy for that marginal investment decision to be made, is what's critical. But as to whether this GNU is going to be able to execute on that better than what we've seen in the past, I mean, that remains to be seen, right? Notwithstanding all of the positivity around it.
David, how the capital markets interpreting this initiative in terms of structural reform?
I think Annabelle said it. Rates are 9%, 10%. There's no threat. Where you can get that by putting your money in long-term bonds, you don't have to take risk anywhere else. So I think the fact that it's been pretty steady. I put a lot of money, of clients' money here, into those bonds. And I go a little further because it's a very liquid market. So I go 20 years out where I'm getting over 11%. So what risk do I have to take? So as long as that exists, I'm going to tell you a story. I think, you see, we've got two bankers here. Corky used to be at Sanlam. When these bankers start lending money, okay, when they lend money, at the moment they don't lend money. That's why they're in such good shape. Because when they start lending more money, when you come and you want to start a venture and you don't have to put your auntie and your granny and up as collateral, where they're just going to lend it to you, then you'll start to see it means that attitudes are changing. But I look at the balance sheets of the banks now with great interest, because you can see that they're holding back, very, very nervous to actually take those risks. We haven't got a venture capital type culture here. We're very scared to do that. When they start to ease and lend, then I know we're on the right path.
Annie?
Sorry, what's the question? The bond market.
Yeah,
capital market.
but in the context of the structural reform that we are seeing at the moment.
Well, we've seen a 150 basis point move in the bond market already, I think, and there's probably not much scope for it to move any further until they are able to get that debt to GDP ratio down. But I remain positive, and I'm still looking forward to that budget in February, because there's certainly been a lot of improvement, a lot of private sector, public collaboration. We haven't seen a lot of results just yet, but like I've mentioned previously, we're not seeing deterioration in a lot of these state-owned entities. Like Annabelle has mentioned, we haven't had any load shedding in 2024, so certainly that's reducing the costs for our retailers who had to burn oil to get their generators up and running. So the operational environment in South Africa is slowly improving. A lot of it has already been discounted. What I think is going forward, we probably can see a broader recovery, because earlier this year, because of the cost of living crisis, we've seen performance in a selected few stocks, only certain sectors. So I think not only South Africa, I think the whole of America as well, where we've only seen selected, concentrated pockets of performance, can now enter a period where we see a broader market reaction. So I'm feeling positive for the next 2-3 years.
Koki, gearing says a lot in terms of how companies are feeling. The more debt they take, they're quite positive. What are we seeing at the moment?
Yeah, as David said, the banks haven't been really lending. And that reflects the fact that companies are still hesitant to take on debt. So the gearing levels are about as low as they've been. Obviously, post-COVID, gearing levels shot up because of the unexpected shock to the economy, and but gearing levels have actually come down. It's actually at consumer level that the debt is at its highest, especially the middle sector, and that's really because they were caught by surprise by the sudden hike in interest rates. So gearing is also saying to us that corporates, well, we'll see the next set of results after this one if corporates are starting to gear. But are we going to have one more round after this?
My timekeeper. Are we doing 5 minutes? Okay. Sure.
Yeah, it's just so fascinating to me. I'm in the position that my responsibility is to look at banks globally, and we look at economies globally, and you can just see guys who are doing it right. I mentioned Greece, I mentioned Argentina, and then recently had a Mexican election. I don't know if you followed that. And the currency falls 10% and the banks fall 20%. Why? Because the first thing that Claudia does, the new president who took over from AMLO, is she removes the independence of the judiciary. And so what does the market say? We don't like this. This is a very warning sign. And so markets look at the direction you're going. And so to my mind, if you ask me, there are 3 just so easy wins that we've got to do. Number one is just, and it will be short, don't worry. Number one is just bring back accountability. David and Peter, myself, come from an age, well, we can remember when we didn't have there weren't cell phones. In fact, I can still remember there weren't TVs. We didn't have TVs. So, I mean, can you imagine life with no TVs, no cell phones? It actually was wonderful, but okay, that's a different story. Tell my grandchildren, they stop listening. But when I was an accountant at a corporate, whenever I had to sign a check, there was supporting documentation, and you had 3 signatories. And each 3 of those 3 checked the supporting documentation before signing a check. Part of the process was you had a budget, and you did what we call bottom-up budgeting. So every expense you try to justify again. So I think the most important thing our president can do is simply bringing back accountability. Those treasurers who signed off at municipalities allowing the debt to Eskom to balloon, why aren't they fired? Why aren't they in court? Because that's your function as a treasurer, to look after the financial well-being of that municipality or organization. And you're sitting there and you're allowing these checks to go out while you know there's a big liability, and you're not ringing the bell and say, guys, we can't pay this. We first got to pay Eskom. And okay, there are a lot of reasons for that. We know it's political expediency. But if we just bring back accountability and just the functions to make sure that capital get allocated properly to projects where corruption gets reduced, I think you're going to see capital coming in. 2 quick other ones. The other one is obvious, Transnet. Just fix Transnet, whatever it takes, because that allows our exports to grow, and exports create jobs. And at the same time, it reduces your import costs, because at the moment the delays cost you money, so it also creates jobs. And the third one is education. We need to spend money on education. Now you guys are starting to do it here yourself, so it's private sector led, which is great. But if you do those 3 things, I think a lot of capital will start coming back, because they'll look at the direction of travel.
Okay, last one from Peter. I saw
But
yesterday.
1 minute, structural. If I take out a magnifying glass, I can see a little bit of structural change, but it's under the radar. Government doesn't want to publicize it. They don't want anyone to see that they are changing. They know they have to, but they don't want to. But I've got a big magnifying glass and many contacts. And they've told me there's some small cracks. The one structure, Eskom. Now I know we think we have no load shedding because we got rid of that white goof off to Reuter, and we brought in a proper comrade. And maybe that's some of it. But the structural change in Eskom is they're now allowed to employ people they want. They're allowed to get services from anybody they want. Doesn't have to be the 70%. So they can fire and hire who they want. They're even hiring white people. But that's a structural change, but it's unofficial. Hasn't changed policy. Government won't change a policy. That's why. The other reason we're not having load shedding, it's a big structural change in the country. Demand is dead. There's no heartbeat. I was at the energy conference last week. We had an insider give us all the numbers. Demand is flat. There's no pulse, no heart. So we're not even growing at 0.1%. So there's a positive structural change that's helping Eskom not have breakdowns, but there's a big negative structural change. The economy's structure is collapsing. It's been deindustrializing.
Yeah, I saw that Venetia is retrenching about 2,000 people. And I mean, they are the single largest diamond producer. Annabelle, parting shot from you?
Yes, thank you very much. Look, I think we've talked about many different aspects of the economy, and I think, it's been a very broad discussion today. Excuse me, I'd certainly say that we're on an improvement compared to where we were 5 years ago. And I think, if we look forward 5 years, we're looking for economic growth to run at 3%. So, coming from 1% this year, it's going to be a structural change in the South African economy. It's not likely to be economic growth that's driven, for example, by a cyclical or once-off factor. It's going to be something which we think is going to be embedded. So to get there, we're going to look at economic growth rising towards 1.5% to 1.7% next year, tipping over 2% the following year, and continuing to rise up. This requires, obviously, structural investment, and we're very positive on the infrastructure outlook for South Africa, whether it's from the private or government sector. It doesn't mean we're going to be running an economic growth rate of 5%, an infrastructure investment of 10 or 15%, as we saw at the end of the Thabo Mbeki presidency, but rather we're going to see a gradual improvement. We're looking for a positive economic outlook. But of course, there's still a lot of uncertainties. We find ourselves in a situation of change, what's coming through from the US, and we'll wait to see what their policies are actually going to be before we'll get a final outlook. But we certainly have an optimistic view.
Yeah, certainly those growth projections have already been penciled in. But 3%, Melanie, I don't know if we'll achieve that.
It sounds optimistic, but I should just say, I think there's a lot of uncertainty here at home and abroad. But if I think back to where we were at the start of the year, I'm certainly feeling a little bit more optimistic about things. At the start of the year, there was a lot of political uncertainty. We're still at the height of load shedding. Inflation was still very high, not just here, but around the world. We didn't know what central banks were going to do and when. Right now, we've got a government in place that I think a lot of people agree is probably what the country needs right now. We don't have load shedding. Touch wood. Inflation has come down 3.8% here. It looks like it'll continue to come down. There are risks for sure. Even Governor Kganyago, the reluctant Carter, has started to cut interest rates. So, individually, these things may not sound like they make a huge difference, but I think collectively, they do start to put us in a space where we can credibly make an argument, I think, for growth that is, above 2% next year, which doesn't sound like much, I think, in the context of what you see in EM, but 2% is a big deal for an economy that over the past 15 years has only grown by 1% per annum.
David?
Yeah, I love history. And the one thing, I don't know which God, you can choose your God, created the world. But whatever that God was had the same thing in mind. Just imbued this country with the most incredible resources. There's nothing that we haven't got. If you look at the beauty of the country, if you look at the game that we have, there's nowhere in the world that has got the resources that we have. The beaches, even the golf courses, which they're playing on now as we get this. There's incredible opportunity here. But from the time that Van Riebeck landed in 1652 to establish a refreshment station for the East Indian Company, there's been conflict, just conflict of hatred amongst everyone. Yes, once you brought the British here, that was the end. Because wherever the British land, they just create absolute chaos. And, even from the Zulu Wars, which they created themselves to get to the Transvaal. And we thought we had an issue in 1994. We thought, thank goodness, things are finally going to come right. And then we suddenly discovered the Rand, or what Peter said, the 30-70 rule or this whatever rule. And all I'm trying to get at is that this is a country blessed with resources. Even the people are magnificent. And you just say, hold on, government, can't you just get it right? Can't you just give us a break? Because if they could just give us a break and let everybody do what they want to do in a controlled, accountable way, we've got a chance. It's not, the resources are here for improvement. It's just us that are making a mess.
Yeah, the human factor, which is at the center. Last one, Annie.
I think if our chairman of Regenesis was here today, Dr. Marco Saravanya, he would have lectured government on conscious leadership, because that's one of his favorite topics. So I would just, in my closing remark, like to thank all these panelists for attending today, including you for moderating. Thank you very, very much. And we really, really appreciate that these two gentlemen came all the way from Cape Town very, very early this morning in very bad weather. And it was such a pleasure to host these legends. David doesn't like it, we call him a legend, but he is a legend. And even these two top economists, thank you so much. I think we left out to say at the beginning of this session that this is only for information purposes and should not be seen as investment advice. It is necessary to mention that if you need any advice, you're welcome to speak to one of us or to your own financial advisor. So from my side, in conclusion, I remain positive. I think we are seeing changes. I do hear all the concerns. I'm also concerned about that. But I'm just thinking from the beginning of this year to where we are now, and from what we thought before the election, how much worse it could have been. So I think we are blessed to be where we are today and having the economy that we have right now. And I think from here it can only get better. Thank you.
Thank you very much. It's been great. Thank you. Thank you very much, and thank you for joining us. I think this is the end of it.
Sorry, we've advertised that somebody in the audience will be winning a prize today, because My Wealth Investments and Regenesis will be launching a CPD program online towards the end of November. Unfortunately, it's not ready yet, but we are still handing out that voucher, and that person can contact us and we will give free access for I think there will be about 30 points, 30 CPD hours on that online program. So that prize I will be handing out now. Johan, if somebody can just give me, Rulene will give me the name, and then we'll just be handing out some gifts to all the panelists. Okay, the person that can come forward is Nomsa from Alan Gray. Congratulations. So as soon as the program is live, we'll contact you. Thank you very much. And seeing that I'm up here, and Ronnie, do you want to hand over the gifts?